might be a readjustment. So gold's going up, silver's going up. You've got investors going completely insane because you've got all these people with money out there. You can't leave it in the bank because of the interest rates. You can't leave it in the bond market because that's being destroyed. You can't invest in property because we're still here's the next thing. We're still probably 6 months out of the true bottom of the housing market. So within 4 to 6 months or so, by the middle of summer, once again towards the election or so, that's when you're going to start seeing the real crunch from the housing market going on. There was, for example, a big controversy between the Federal Reserve that just printed up about $2 billion in the basement with the Keebler cookie elves and
$200 billion.
No, $2 billion. I'm talking about a year ago. They printed up $2 billion. They walked over to the government, the federal building, and basically bought $2 billion worth of securities. And even the Congress started whining, jumping up and down, saying, you can't just print $2 billion out of nowhere when it's worth nothing and take it over here and actually buy securities that are worth something. This is Wall Street's going to go crazy. Why was there this 400-point jump in the market? Because when $200 billion liquid capital just gets dumped, the people that benefit are the people that get the money first. The banks, the insurance companies, the big Wall Street guys. By the time the money trickles down to you and me, where the money's where the money becomes worth practically nothing, we're the ones that are hurt by all this. All they're doing is pumping useless, baseless capital into the markets, and they're doing exactly the same thing now that you saw the Federal Reserve doing when it was first formed after 1913. Very minor, brief history lesson. 1913, the Federal Reserve comes in. They pass the federal income tax. The Fed begins to flood the markets with cheap capital, which funds the Roaring Twenties and Calvin Coolidge and the whole nine yards. They then stop printing money, and when they stop printing money, that's when the entire federal government goes bankrupt in 1933. They go bankrupt to the privately owned Federal Reserve, and what you're seeing today, this is what's happening to the Europeans. With the Europeans, they were dumb enough to form this European Union about 12 years or so ago. They formed a central bank in Europe. They started printing euros, cheap capital all across Europe. Everybody was happy, big economic boom, and now they've stopped printing euros, and the French are in trouble. The Spanish are already bankrupt. The Italians are going broke. They just laid off something like 30,000 people in Europe, in Germany, actually. And I said over and over and over again, this is the Mayan fifth night. This is the year of Armageddon, to watch Italy, watch Germany, watch the reactions of these markets, and then when the euro hit $1.52, stuff in Europe would start to break. My projection of oil was that not only would we see oil over $100, but you're going to see oil at $125, which means that you're going to have oil, you're going to have gasoline
$5 a gallon.
$5 a gallon. You're going to see diesel at between $6 and $6.25. And when all these things come together, things are going to start to break. The economy is simply not going to be able to function. That means food doesn't get to places. People can't travel. It affects every single other industry out there. And what you're seeing is and this is probably why they fired Fallon, and they're getting ready to go into another war to distract people from what's going on, from the economic pain that's about to happen, because the United States is being foreclosed on. And we talked about this 2 years ago when the Bilderbergers all met, and 2 years ago we talked about how they were going to wipe out the housing market and the subprime market. And this is, once again, George, this isn't psychic power. This is people paying attention. This is listening to alternative media. This is understanding that when 600 of the richest people in the world get together and say they're going to do something, they ain't just whistling Dixie. And this jump in the stock market today is just one more example that what is good for Wall Street is terrible for Main Street, because, again, the United States is being foreclosed on, and the fact that they're giving out $450 a person and $200 billion is a fiscal policy that's insane. I mean, this is the Weimar Republic. Are people going to start buying loaves of bread with wheelbarrows full of money that's completely worthless and backed by nothing? It's just it's outrageous. We are literally heading headlong into the abyss, and I'm usually the optimistic one that says, look, it's going to be okay if we just ride this out. But I don't see where this ends outside of a complete fiscal collapse. Well, here's where it ends, George, and let me throw some conspiracy theory in there for you.
Do you have anything good to say?
Well, they're printing the Amero right now in Denver. And now that the U.S. dollar is worth about 65 cents of what it was, now that you have the Canadian dollar worth exactly the same as the U.S. dollar, the Mexican peso is still, actually it slipped a bit, but it's between about 9 or 10 to 1 or so, the Mexican peso. The idea here is that, and we talked about this on the show the last time I was on, that there's talk at the highest level to simply let the Federal Reserve note just go. Let it slide. Let our currency just completely go into the abyss. They introduced the Amero. The Amero will be backed by silver, and now we have, just like the euro that they introduced about 12 years or so ago in Europe, now we'll have a viable currency that can be used for the United States, Mexico, and Canada, and this is all a drive towards the merger of the U.S., Mexico, and Canada into the NAU, the North American Union.
I got to get you and Jerry Corsi together. Let's go to some of the phone calls.